I believe we're going through a massive fundamental shift right now, something I've been hoping for and finally seems to be coming to fruition. Now, a lot of times, in fact, historically, hype alone has driven the price of tokens alone. And that's what meme coins and things prey on. But if you're holding bags of coins purely driven on speculation and hype alone, you might be missing an opportunity for the biggest gains. After all, this is an industry meant to be built to change the world. So today, we're going to talk about some projects that are fundamentally very, very strong and have true token utility in the strongest, one of the strongest foundations in the crypto space. So ladies and gentlemen, if you're interested in some really good opportunities, at least in my opinion, they are. Of course, not financial advice over here. So ladies and gentlemen, if you're looking forward to this, do me a favor. Destroy the like button. Yeah, it's Rupert in the back. Okay, guys. All right, let's get into it. Rupert's excited for the show, obviously. Okay, so Bitcoin doing its thing. And guys, historically, February has been one of the most bullish months. Now, for the macro news today, guys, all you have to do is scroll down my timeline. If you're not following me on X, I suggest that you go do that at Kyle_Chasse. This is crypto wallets just hit an all-time high of 36 million users in Q4 2024. Growing. Robinhood launched futures trading. Trump Media just pumped $250 million into crypto. And of course, the biggest news and macro news of today is that the Czech central bank wants to buy Bitcoin. They're going to vote on this, I believe, tomorrow or very, very soon. And if it passes, they'll put 5% of 146 billion euros into Bitcoin and buy it immediately because they want to front run the United States, right? And you got Senator Cynthia Lummis coming in and say that the United States is going to buy 200,000 Bitcoin a year, for the next 5 years. And you want to buy before that, right? You want to buy before that. I hope you guys are doing the same thing, right? And another thing too is for you guys who are kind of new here or newer or forgot, let's take a look at our altcoin bags and meme coins and AI tokens and how badly they dropped, but how well Bitcoin has held up to give you some perspective, right? And this is why I encourage you guys on a daily basis to make sure that a good amount of your portfolio is dedicated to Bitcoin because it is the thing that the world is adopting right now. The only thing that is being globally adopted right now, without a doubt. In the future, likely there's going to be other things too, right? XRP and Solana, but pretty much globally recognized as digital gold, the king, Bitcoin, I think is really important. And we're watching that play out like crazy. Tether, money printers coming on. Another $1 billion is printed in Tether. We know that when the Tether printer comes up, you should pump the market. And the thing is, with stick to fundamentals, right? Remember, meme coins and these kind of things are a small gamble. They're fun. They can do nice returns, but you should not be putting your life savings into them. Stick to fundamentals, and over the long term, like for me, guys, I bought Bitcoin back in like 2012, 11, and that's really what allowed me to become financially free. And you might say, well, yeah, it's so easy, Kyle. You bought it back in 2012, 2013. But I held on to a lot of it. And that's the thing, right? A lot of people didn't. They didn't hold, didn't have that long-term conviction. So it can be just as easy as buying and holding because we do know that Bitcoin is sitting at $100,000 right now and likely over the next, 15 years or something like that to go to $10 million or something, right? So you still have another 100x in it probably from here. That's just the reality situation. So stick to fundamentals. You're going to be good, right? Gambling on this stuff is, but like, hopefully a lot of the audience here wants to become investors. Like, let's not try to get rich quick. Let's have a strategy in place, barbell strategy, as we talk about on the show a lot, majority of your investments in the more blue chips, Bitcoin, the Ethereum, Solana, Chainlink, like those are where I am predominantly in the blue chips, then your other altcoins, large caps or whatever. And then of course you have a small portfolio, huge risk, huge reward in the memes the AI agents, and things like that. I would call the AI agents themselves more like almost like memes, and then the infrastructure more like layer ones. But today's show, we're really going to talk about the Solana ecosystem, as it's just been massively outperforming everything. And like the user experience there is so much better. This bull run, I don't expect much to be happening on ETH. Maybe some activity on ETH layer 2s like Base, for example, will probably do really well because of Coinbase. But Solana and Sui and Base, I think, are going to be the ones. But Solana is clearly dominating right now. And as we can see here, 4 out of the top 5 earners and fees are on Solana. Jito, which is impressive, Meteora, Raydium, and Solana. So Alo over here says, Sol remains mispriced. Apps on Solana are generating a lot more revenue than apps on Ethereum. Solana is generating more monthly revenue than Ethereum for the first time in history as well. The valuation gap simply has to close. I agree. I'm starting to agree with this. I still think that the Solana network has work to do, but they're doing the work. As you guys know, doing a transaction on Solana or Sui is just like night and day with doing something on Ethereum. So application revenue serves as an indicator of success for business with an ecosystem. Here's a weekly update. App revenue, market share, week over week change. So Solana up 75 and 90%. But anyway, it's doing much more than the other chains, right? Way more revenue than Ethereum, BNB, and Base. Absolutely crushing. Now, let me address something real quick. So revenue is an indicator of success for sure, but this isn't necessarily, so don't translate that to revenue equals token go up, because how different crypto token projects decide to shape their economy, depend on how the token performs on that. Like some protocols could be making tons of money, and that money is just going in the pocket of the founders and not being used to buy back or put pressure on the token or anything like that, right? We'll get into this a bit more in just a second. And Solana is now the leading AI chain. It was Base before, and then Virtuals, which had all the volume, is now also available on Solana. So that should even widen the gap. Now, when it comes down to mind share, according to Kaito, when you look at DeFi, it's Hyperliquid, Jupiter, and Raydium. Vance says something over here that I've been talking about. You guys know I've been talking about this for a very long time. 2 projects I'm involved with, Paid and Commonwealth, are built all around this. And I wrote a Medium article as well called Protocol Pump Player. And it was an evolution of Meow's post from Jupiter. Well, we're going to talk about Jupiter in just a second here as well, but and Paid in a second. But Vance says the alt recovery will be led by those who buy back their own token in size. Size equals 10% of the supply or more bought every 3 to 6 months. The biggest buyer of your token has to be the project itself. Soak the supply up, then others will come to the fray. Few moving like this. Also, I believe this is so true, and this is what in the Medium article I wrote, right? Like if you're generating revenue, buy back your token, and in my opinion, burn it. Get rid of it, or use it back, or do some combination. Some burn, some redistributed to incentive for people to do things, whatever. But let's stop the inflation, because a lot of tokens have a small market cap and a high FDV, and that's just inflation. So if you're buying back, at least you can offset that inflation, and ideally would be to burn those tokens and remove them from circulation. Now, I just want to bring attention to Paid. Paid has been doing some good launches recently. Of course, with the recent market correction, like everything else, down a little bit, but the past 4 or 5 or 6 launches on Paid have been doing really, really well. If you guys don't know, Paid Network is the launch pad that I founded with my team. I just want to show you guys this real quick. This is if you go to paydnetwork.com/economy, I believe this is like the gold standard, and we're still doing work here. It's so important to understand everything that's happening with in a transparent way, the token economy, right? Like if a protocol is earning fees, what are they doing with them? And so here you can see the Paid economy, like you can see most of the important things, including all the token contract addresses and full transparency of everything. just like countries have, transparent treasuries and spending and GDP, every token economy should have the same thing. And so you can see, it's not really into hyper launchpad season yet. It's just getting there, right? Like I said, the past 5 or 6 launches have done quite well on Paid. Paid is now the number 2 launchpad in the world, ranked by CryptoRank for returns. And now we're setting a gold standard here with transparency in what's happening into the Paid token. So you can see this fuel to be consumed essentially is fees have been earned that are going to be used to buy back the token as they unlock according to the vesting schedule, because Paid launches projects and collects some of those tokens, but they're the same vesting schedule as the participants. And so as they unlock, they're sold and they buy back the Paid token, and some of them are burnt and some of them are redistributed to Paid stakers as rewards. So you can see that we already have $1 million of buybacks coming, and the season's just getting started. So I just wanted to show that to you. If you guys wanted to go check it out, dive into it, it's really, really cool. And so it very much aligns with the statement. The biggest runners are going to be the ones who are buying back where essentially the whole Medium article I wrote, protocol pumps players, exactly what this guy's saying here. So congratulations, Jupiter Exchange, for 50% of fees to buy back. Now, I like Meow and I like Jupiter a lot. I like what he's doing. I love using Jupiter, the aggregator, and they just blew my mind today with what's going on. So Artemis made some good data here. It says, we see on Artemis that there's 80 billion of aggregator volume plus 20 billion of perp volume per month, $100 billion of monthly total volume on Jupiter, 100 billion monthly volume times 0.1% times 50% is roughly $600 million of annualized buyback. At 2.4 billion circulated market cap, that's roughly 25% of market cap. Alignment action, 50% of Jupiter Exchange protocol fees will now go toward Jupe buybacks. Like, this is huge. The reason why, look at on the max timeline, if I go to price, it's like been uneventful. Like, it's really not gone below 75 cents and really kind of not gone above like $1.50 or something like that, right? So could this be the catalyst that actually sends Jupiter skyrocketing? Yeah, it's not cheap at a $1.8 billion circulating market cap, 7.5 billion. I'm less worried about the FDV because of these buybacks that are going to start help to offset inflation. Who knows? They might actually burn a bunch of the supply, but there's more good news coming up here soon as well. So Hitesh over here says, Jupiter is exactly where Binance was in 2019. Similar growth trajectory, similar community vibes, great early traction. Jupe is undervalued right now. Some key fundamental growth stats you should know about past 90 days. TVL has increased by 78%. Fees increased by 214%. Trade volume increased by 265%. Active users plus 86%. And traders by 220%. Like, huge growth. And Jupiter burned around $3 billion. What? $3 billion worth of tokens in their Genesis community event recently, and also announced a buyback using 50% of protocol fees. Yeah, this is just insane. So FDV is still 7.5. Yeah, that's right, because they had a max supply of 10 billion. They burnt 3 billion, gives the new total supply here about 7 billion. It's about $1, 7 billion, a little bit over. So that makes sense. So Hitesh continued to say that Jupe traded around 66 cents on the first day of its listing. The current price isn't even 2x from the day one price. Jupe has never had significant rally since its launch, but I think the time has finally arrived. They've hit the perfect attention spot after the recent events. Since Meow said every coin is meme coin, why not make Jupe the biggest meme coin of all time? They've got everything in place, a cult, tech, and incentives. Now it's just a matter of waiting, watching, and seeing how Jupe's price action follows the lead from here. So they did some big things, and I think this buyback is going to be huge, and with their growth, it makes a lot of sense. Now, this is nuts. If you guys want to go read this full article, over here, you just go to the block and check out the Cat Istanbul event, right? And I did read this whole thing earlier, but the most important things are that Jupiter acquired a majority stake in Moonshot, guys. So now Jupiter owns a majority stake in Moonshot, so basically bought Moonshot, and they announced JupeNet and a $10 million $10 million AI fund, along with the AI16Z and Eliza DAO guys, which is crazy. So JupeNet is something else that's really impressive. Essentially, they're building a layer 1, Jupiter is. It's an early test set right now that's going to aggregate everything, right? It is an aggregator, and they're building it to aggregate essentially liquidity across all chains, act like a SEX, but actually be a DEX. And it's an early testnet right now. And this could send this way higher. Way, way, way higher. Bagsy thinks that he believes that Jupiter is a uni of a cycle. I think it's probably even, for me, I think it's potentially has much more upside actually. Okay, and the next one we're gonna look at is Raydium. So Raydium is amongst the top 4 protocols in crypto generating fees. It is the main DEX in Solana. Over the last year, Raydium has earned more trading fees than Uniswap v3, making it the single largest revenue generator across every single application layer. Despite this, Ray trades at less than 1/3 of Uniswap's market capitalization. Unlike Uniswap, Raydium directs a portion of protocol fees to buybacks of Ray, which not only means substantially cheaper, but also value accretive for holders. 12%, by the way, of the fees earned go back to buybacks. And you can see over here from Sharple says, for context, the size of Raydium Protocol's buyback program, there is currently more Ray accumulated from buybacks than held on centralized exchanges. What are they going to do with the buybacks? I don't know. I'd love to see them burn them, but maybe they're afraid that, historically before, most attorneys were encouraging their clients, people like us, to not do burning because it might be looked at from the SEC as securities, blah, blah, blah. So maybe that's why they haven't burnt them yet. Maybe they will do a big burn. That'd be sweet to see them do that. Let's get those tokens out of circulation. Let's make a more scarce asset. All right? Scarcity is king. Top 15 DeFi projects by 30-day active users. Raydium, numero uno. Jupiter, number 3. Totally crazy. Totally crazy. And another reason why Raydium is very bullish here, not only is it blowing all kinds of records everywhere on Solana, just crushing numbers. But they also introduced a perpetuals protocol with up to 40 and gas free up to 40x leverage, like absolutely nuts. So Raydium now does perpetuals, and I imagine that a percentage of those fees will also go back to buybacks. Makes a lot of sense. And Raydium sitting here at a $1.8 billion circulating market cap. For me, Uniswap last bull run went to a $22 billion market cap. I don't see why Jupiter and Raydium wouldn't do the same thing. 15, 20x from here, potentially higher, more aggressive bull run, crazier revenue coming in. Solana has way more attention, and it's obviously the number 1 protocol for people to use right now in the space. So we're talking about 2 of the most important apps in Solana that to me seem underpriced, right? And so when I look at blue chips and upside opportunity, I would say lower risk, medium return, medium, that's like in traditional terms, it's an exceptional return. But anyway, guys, not financial advice, do your own research. And some final news for today, guess what? Phantom has integrated Sui. So you can send, swap, and explore first move-based chain on Phantom. And you guys know my favorite meme over there on Tardy. So I think that, they released this, they're doing a live spaces right now. They released this rap video earlier. It's pretty funny. But I believe that this is going to drive so much liquidity into Sui as well. And so, still I'm cautiously optimistic. Still a lot to prove, but I'm hearing a lot of rumors around the rumor mill. We know that Trump's family is holding Sui as well. So we'll see. But if I had to pick one, Jupiter or Raydium, or which one, I think that Jupiter makes more sense. I just like the way Meow thinks. I think they have so many products. They continue to innovate. Let's see. There was one more. Oh yeah. Just here. There's so much that you can do. There's swaps, like DCA, I don't even know, perps, the Jupiter Launchpad, Jupiter Soul, Ape Pro, Jupiter, I don't even know what most of these are, but they just keep building and shipping and developing, and now they're building this crazy layer 1 that's going to be something similar to like Hyperliquid. So if you follow the Hyperliquid story, then you'll love what JupeNet is doing, guys. And so for me, that is going to be probably the biggest winner. Let's see, we call it at $1.07. Let's see in 6 months how it does. All right, guys. Catch you tomorrow.